Ladies and gents, I told you to buy when the market corrected itself by 15%. Today I'm telling you to sell and telling you to prepare for what's to come. This video is going to have a little bit of darkness, but a little bit of hope as well. I'm here to predict the next move. That's my job as a swing trader. That's your job, matter of fact, is to predict what's going to happen next, because that's how you make money, is when you buy cheap. So we rebounded from the 15% dip. We're back to exactly where we were for the Nasdaq. So this correction was like short-lived, even though this was fear of recession and the end of the world. But guys, this correction wasn't really a correction because this was specific to the Nasdaq. It wasn't like the Dow Jones also followed. So here's the thing, and here's what's going to happen, guys, and you're going to see that firsthand. By the way, before I begin, you should start to secure your profits and treat the market like a hot potato. Okay? You should treat the market like it's about to pull back any minute, correct itself any minute. So here's the thing, guys. The market corrected itself, or the Nasdaq, because there was fear of growth. And this growth and the Nasdaq itself was being pushed by Nvidia and all these AI stocks, tech stocks. Guys, what's going to be next that could push the Nasdaq higher? Or do you think there's going to be demand in the world? Well, a lot of people say if we cut interest, people start to have money. I actually say that. People start to have money, they start to spend. Companies start to pay less in interest. Sure. But then interest rates, it depends how fast they cut. If they cut the 5% instantly, then the market could start feeling it immediately. But the interest rate cuts are going to go on for like a year maybe, all right? And it's going to be gradual. So throughout this time, what you have is pain, more pain. So if today companies come out and say we're not going to grow for the next couple of quarters, you can't bet on interest rates to make the company better, because the company is not going to benefit from the interest rates maybe for a year, for another year. Consumers will not benefit also. So the Feds have done their job in depleting people's savings, your savings, right? And they also encourage you to save. So they did two things. Number one, they depleted savings because people can't afford high interest payments on mortgages. So now they have to use their savings. Everything was expensive. And they encourage you not to invest your money and contribute to high costs of goods and save it. And that's what interest rates have done. Now they're going to take their hand off the scales, and basically it will take a little bit of time. But if companies are telling you demand is going to be low, you cannot bet on the future to be bright when we just said that interest rates is going to take at least a year for it to start showing real effects and results. And companies meanwhile are saying, well, it's going to take us another few years or a year to see the demand that we used to see, because suddenly people are not spending like they used to, or they're not really, they don't have the money to spend like they used to because they depleted savings. So there's all these and another I guess side of the coin is to say that people now have money because they don't want to save anymore, they want to invest it. So there's two sides to this coin. But short term, you're going to get a correction, a real correction, because the markets now are overvalued, in my opinion. You are going to get a correction, guys. You are going to see yourself, maybe, just maybe, taking a 10% hit on the Nasdaq, maybe even 18% hit, because there is space for an 18% dip in the Nasdaq composite. I don't know about the Dow Jones, but the Nasdaq composite is basically the future. That's what it represents. People bet on the Nasdaq because they believe the Nasdaq is the future. Everything in the Nasdaq is the future. Okay, so all I'm doing here is warning you. So where does that leave you? Well, you have to be very careful. You cannot trade like the way you used to trade, right? You cannot be greedy. This is the year to be, or the remainder of 2024 is to be extra careful. Now you're gonna say, well, what about the elections? What about the elections? What does Donald Trump or Kamala Harris or whoever is gonna be in charge, what are they gonna contribute to an economy? Words, right? Just words. And then later on, as the scales begin to align, the actual feds do the job for whoever's in charge, right? That's why Donald Trump said, I hope the economy crashes before I get into, or the stock market crashes before I get into office, because he doesn't want to be in charge. I mean, he knows he can't do much if the economy is already on a thin line. But I don't think there's going to be like a major crash. What I do think will happen is a correction or a pullback, one of those two things. Yes, we already had one, but we're gonna have a real one. A one, like you can't see it coming. That's what I'm saying. And look, I know I'm the gloomy guy, but I have never been the gloomy guy. I've always been the guy, if you watch my videos, to tell you everything's gonna be great. Everything's gonna be great in the world. But it's just too much to say that. I guess the market valuation is too much, guys, right? It just doesn't make sense, even for me. I mean, even if you get the biggest bull out there, they'll tell you the market is too expensive. Because when you bet on stocks, you're betting on the future. And if we don't see any growth for the future, then why are we betting on stocks? Let's sell. Okay, that's how you trade. That's how you view swing trading. By the way, just let me take a pause here. I've reopened the Patreon. There's about 80 spots left, okay, for those who want to swing trade with me. So, with that being said, you can find the link below. Where do you go from here? Well, you have to wait. You have to treat the market like a hot potato. You have to treat the market like it's about to pull back any minute. I might be wrong. I don't think I'm wrong. I think I'm early in sounding the alarm, but I don't think I'm wrong, because I was waiting for a pullback in December 2023, for those of you who follow me, and I didn't get it till May, right? That pullback, that's 5 months later. The market can do its thing short term, but it will eventually, I guess, pull back. But short term, it can go anywhere. So your best bet here is to use low capital and adjust your size and your position when trading. That's the only way to survive any economic downturn, because your money is not fully invested. But I think it's going to be great, guys. We need this correction. If we want to see great things in the next couple of years, we need some kind of a correction in the market. It's just the when. When is it going to happen? When is the hardest part. You can predict that it will happen, and you can say the data doesn't match, but the when is difficult. And I guess, you know, what's the difference between being early and wrong? You're both wrong in this case. If I'm early today and I'm telling you there's going to be a correction in the next couple of months, you know, it doesn't happen, then I guess I'm wrong. But then it ends up happening. Does that make me right? Well, I'm still wrong, because you probably only use 20% of your capital. But it's worth it. It's worth to adjust your risk. Okay, guys, that's all I want to say. I know there's too many things thrown at you guys. Hopefully you understood this. I know not everybody understands these jargons and all of this, but it's best to be safe, right? It's best to be safe, guys. All right, that's me done. I'll see you next time. Appreciate you for watching. Peace and love as always. And look, at the end of the day, guys, I only control what I think is going to happen. But data can change everything. It might be different this time around if the data is different. Okay, guys, peace and love as always, and I appreciate you for watching. Bye.